Now, as you can see in this question, they have provided you with a statement of financial position for two companies, which is Dickens and Jones. They have also given you with some additional information, and then they have asked you to prepare the consolidated statement of financial position for the Dickens Group as at 31st December 2008. Now, when you're approaching a consolidation question in your exam, the first thing to make your life easier would be to prepare a group structure. Okay. So the first step or the first working would be to prepare the group structure, where you can see that in this case, Dickin is the parent because it has acquired 16,000 ordinary $1 shares in Jones on this date, 1st of January, when its retained earnings stood at 20,000 and the share premium was 10,000. So basically, the parent in this question is your Dickens, okay, and the subsidiary is your Jones. Now, the other thing what you have to do is you have to figure out the date of acquisition, which is 1st of January 2008, whereas you're preparing the balance sheet as at 31st December 2008. So the date of acquisition is 1 year before the balance sheet date. Okay. So that's 1st of January 2008. The next thing what you need to be clear about while you're doing with the group structure working is to identify the percentage of ownership. Now, in some question, they might give you that this is the percentage of the share capital that has been owned by the parent in the subsidiary, but in other question, they might give you the number of shares as they have given it in this question. Okay, and then you would have to determine the percentage of ownership. So we also need to understand the percentage of ownership. Now, Dickens has acquired only 16,000 ordinary shares, whereas if you see the share capital of Jones, it has 20,000 shares. Why? Because the ordinary nominal value of per share is $1. So 20,000 divided by $1, it will give you 20,000 number of shares. But in case if this would have been $0.5 nominal value or the par value, then it would have been 20,000 divided by 0.5 and you would have got 40,000 number of shares. So please make sure that when you're doing the exam question, you are careful about the par value or the nominal value. It's not necessary that they will give it to you at $1. It can be 0.25, it can be 0.5, it can be 0.4, it can be anything. So you have to figure out it properly before you find out the total number of the shares of the subsidiary. Anyways, in this case, it's $1. So in order to figure out your percentage of ownership, it's going to be 16,000 divided by 20,000 and you will get 80 percentage. Okay. So the percentage of ownership is 80, whereas then the other percentage which you don't own and you consider it to be as your non-controlling interest is going to be 20 percentage. Now, once when you have prepared the group structure, which includes that who's the parent, who's the subsidiary, what's the percentage of ownership, and from what date you actually own the shares, it's time to move out to the next working, which is to figure out the net assets of the subsidiary, which is the Jones company in this question, at the date when you are acquiring the company, and then we also need to find out the net assets of the Jones company, your subsidiary, when you're preparing the balance sheet. Okay. So now see, working two would be to figure out the net assets of Jones company. This is the date of acquisition. And this is going to be the date of balance sheet. Okay. So when you're buying a company, you're actually buying its assets and its liabilities. But for the purpose of consolidation, we can just sum it up to its net assets or the capital, right? So if you see the capital or the equity of Jones, it contains of the number of shares, you have share premium, and you have retained earnings. So basically, you have these three things as part of its equity or it's part of its net assets. It's quite convenient to write down the equity part instead of writing all the assets and all the liabilities of a specific company subsidiary while you're doing the consolidation. Okay. So now for balance sheet, it's quite simple. You can just simply copy paste these three figures, which is 20, 10, and 25 for the share capital, share premium, and the retained earnings. Okay. So we have its share capital, we have the share premium, and we also have the retained earnings. Okay. So for the balance sheet, it's quite simple. I'm just going to look up in the balance sheet in the question. I'm just going to copy and paste it simply, which is 20, 10, and 25, right? So 20,000, 10,000, and 25. This gives me a total of 55. Now, what you have to work out is for the date of acquisition. Okay. Now, here, if you see in the first point, it says Dickens acquired 16,000 ordinary shares in Jones on 1st of January, which is 1 year before the balance sheet date, when the retained earnings stood at 20 and the share premium was 10. So they have already provided you that the share premium was 10,000, but the retained earnings was 20. So over the year, the profit has or the retained earning has increased by 5,000. Okay. So this is 20,000 over here. Now the share capital will not change. It will remain same as it was at the date of acquisition towards the end of the reporting period, right? In case if the question is silent and doesn't gives you the balances of specific reserves of the equity, it's assumed that it's exactly the same as it was at the balance sheet date and there have been no changes. But when the figures are given, if the question is providing you with the figures, then that indicates that there have been some changes. So at the date of acquisition, you can see the total net assets were 20, 10, and 20. So that makes it up to a total of 50. 50 is the value of the net assets of Jones Company at the date of acquisition, but at the reporting date, it's 55. It increased by 5 because obviously because of the profits being made during the year. Now, once you have done this working number two, you need to understand that this 50,000 is something which we will use for the working of goodwill, which it's mentioned as working three. And then this 55 would be used for the working number four, which is where you will find out the value of the NCI. And the difference between them, which is 5,000, that's something which will be relevant to you for working number five, where we will find out the group retained earnings. Okay. So the difference, which is 55 minus 50, you get 5. This is relevant towards group retained earnings, which you will be doing it in working number 5. So in case if this working 2 is done correctly by you, there are more chances that your upcoming workings will also be done correctly. Okay. So now we will find out the working number 3, which is for the goodwill. Okay. So as you just a quick review, there are two ways as to how the parent company can determine the goodwill. One of them is called as the proportionate method, and the other one is called as the fair value method. Now, when you are in the proportionate method, the goodwill, what you recognize is basically only related to the percentage of the ownership what the parent has in the subsidiary. In this case, that's 80 percentage. So if I was supposed to write down 80 percentage of the goodwill of the Jones company, that's called as the proportionate method. But in case if I write down the NCI goodwill also, it becomes a full value method. So I'm not going to write down 80 percentage of the goodwill, which I was supposed to do it in the proportionate method. I will also add up another 20 percentage of the goodwill, which is for the NCI. And that's why we call it as a full value method. So as per IFRS 3 business combination, you have these two options available for the parent company to write down the goodwill, and the question will specifically mention it to you that what's their policy. So here, as you see, the Dickens Group uses the fair value method to value the non-controlling interest. So it's already given to you the question that we will be using the full value method and not the proportionate one. Okay. And they have also given you on this date the fair value of the 20% NCI and Jones was 12,500. So they have given you this information. Now, for the goodwill, we have to first work out for the 80 percentage of the goodwill, which belongs to the parent controlling part. Okay. So for that 80 percentage, the cost of investment, you can figure it out from the balance sheet over here. You see, they have an investment. Dickens have wrote in their balance sheet that they have an investment which is shares in Jones Company, and they have paid 60,000 for that 80 percentage. So I'm going to write down that cost of investment over here at 60,000. That's what we have paid for. But what we got, how much proportion of the net asset we got, that is what we need to find out. Okay. So we say less share of parents' net assets of Jones at the date of acquisition. Okay. So for that, you see the net asset, I told you that this figure will be used while you're calculating the goodwill, right? So 50,000 is the total value of the net assets of the subsidiary, the Jones Company, and we have acquired 80 percentage of it. So 50,000 into 80 percentage, we get 40. So what we have paid extra is basically 20, okay? And that is considered to be as the goodwill, right? Yeah. So that's, if this question would have been proportionate, I would have just stopped my goodwill working till 20,000. But as in this part, it's all about full value method. That's why we have to calculate the goodwill for the other 20 percentage, which is the NCI. Okay. So for that, you see that they have already provided you the fair value of the NCI at the date of acquisition, which is 1st of January. So the fair value of the NCI at the date of acquisition is 12,500, right? So we'll write down over here 12,500. And likewise, we will also compare the NCI share in the net assets. Okay. So less share of NCI in the net assets. So that's going to be 50,000 into 0.2. 40,000, 80% belongs to the controlling part, and the other 10,000, which is 20% of 50,000, belongs to the NCI. So their fair value, the fair value of the NCI is up by 2,500. So that means that's their goodwill. So the total goodwill, what we get will be 20,000 plus 2,500. So in that case, it will be 22,500. Okay. Like how I have done the working in this is I have divided the goodwill calculation between the controlling part and the non-controlling part. Okay. So if the question asks you proportionate method, your working will end up till 20K. But in case if they have asked you for full value method, then you need to add up another step, which is to find out the goodwill of the NCI, that 20 percentage, and you will add them together and you will get the total goodwill. A simple and easy way to figure out this is that you can do it. You can see the cost of investment, which was 60,000 for the controlling part, and for the NCI, you have 20K, sorry, 12,500, right? So this turns out to be 72 28,500. Okay. And then you can subtract the net assets of Jones at 1st of January 28. That's the date of acquisition, which is 50,000. So you will get back again uh 22,500. So this is also one way to find out the goodwill, and you can also do it by the above way, how as to how I have calculated the goodwill. But the problem over here is that if you divide 22,500 into proportionate 80 and 20, you will not be getting 20,000 and 2,500 actually, because as a proportion, both of them have their own goodwills. Okay. So I cannot, if I take, let's say, 22,500 into 80 percentage, I'm not going to get 20,000, which is actually the goodwill of the parent share, the controlling share. Okay. So it won't help you to differentiate between how much is the goodwill of the controlling part and how much is the goodwill of the NCI part. However, in MCQs, if you're short of time and if you want a quick way to find out the total goodwill, this approach can work quite well also. Okay. So now, once we have figured out our goodwill, the next step would be, as I told you, that we have to find out the valuation of the NCI. Because when you're doing the consolidation, you consolidate 100% of the company, subsidiaries, assets, and liabilities as you're showing control over it. But then you also have to figure out the percentage or the value of that part which you don't have the control, and it's been controlled by the other shareholders who are in minority. So in that case, now what you have to do is working number 4 would be for the non-controlling interest. Okay, right? So now when you're finding out the value of a of any company or a part of its company, it actually depends on two things. One of them is their net assets, the equity, and the second thing is the goodwill, right? So first we have to work out for the net assets, and then we will work out for the goodwill, and you will get the total valuation of that 20 percentage of that business which is not being owned by the Dickens company, right? So at the balance sheet date, I told you before that when you're figuring out your NCI value, you need this 55,000, which is the value of the net assets at the reporting date. So from that 55,000, 20 percentage belongs to the NCI, correct? So what we have to do over here is we'll take 55,000 and we're going to multiply it by 20%. So we get 11,000 over there. Okay. So net assets at the balance sheet date into your NCI percentage or NCI share, right? So that's how you find out the net assets which belongs to your NCI. And as far as goodwill is concerned, you just calculated right now over here, which was 2,500. So you're just going to bring that figure here. Okay. So the total value of NCI would be 13,500, from where 11,000 belongs to the net assets and 2,500 belongs to the goodwill. So that's how you value either a company or you value a part of a company. In this case, 20% of the NCI. So their valuation depends on the net assets and the goodwill. Why we have added goodwill over here? Because it was the policy of the parent company's directors that they will value the NCI at fair value, which means that we will not only talk about the book value of the net asset, we will also consider their goodwill value. Okay. So now once you have figured out the working number 4, which is the non-controlling interest, you have to move further towards the last working, which will be your group retained earnings. Okay. So for that, first thing what you have to do is you have to talk about yourself, which is the parent company, right? So the parent company retained earnings are given to you in their balance sheet, which is here, 70K. Okay. 70,000. And as far as the subsidiary is concerned, uh, the group share will start from the date of the acquisition, like after that. So I told you that there's a difference over here of 5,000. Like during the year, like after the control has been obtained, the retained earnings has increased by 5,000, and that's share of subsidiary retained earnings post acquisition. Okay. So that's 5,000. But from that 5,000, our share is at 80 percentage. So that makes it up to 4,000. So the total group retained earnings would be 70,000 plus 4,000. So that will indicate to 74,000. So those are your group retained earnings, which you will need to report in the balance sheet. Okay. Now, if I have to make the consolidated balance sheet, like when I have done all my workings, okay. Now, see here. So we will make it over here for the Dickens group, okay. We will put a dollar sign and here. Now, as far as property, plant, and equipment is concerned, you just need to sum it up, which is 85 and 18, and that's it, okay. But as far as the investment in share is concerned, I mean, see, when you're consolidating the financial statements, you're preparing a consolidated statement of financial position for a group. You represent parent and subsidiary as one company, right? So in that case, you cannot show an investment within yourself. Other investments which you do will definitely be reported, but any investment which is within the group will not be reflected because you're presenting yourself. The substance of the transaction is like as if you're representing yourself, the parent, and the subsidiary as one company, right? So we cannot show investments within ourselves. Outside investments, external investments are fine, but not within the group itself. So we don't write this investment shares in Jones company of 60,000, but rather we will replace it with the value of the goodwill, which we calculated. Okay, and the goodwill has a value of 22,500 over here. So we need to take the value of goodwill here. Okay. Current assets so far, we just simply need to add them. So 160 plus 84, we get a total of 244,000. And the total value of the assets would be 103. Okay. 22,500 and 244,000. So the total value of the asset turns out to be 369,500. Now, from the equity perspective, you will always report for the parent, right? Because the subsidiaries' equity and share premium, which was at the date of acquisition, has already been acquired. So it has been cancelled with the investment basically. And the extra amount what you paid was considered to be as the goodwill. So here we will only write down the share capital of the parent company. Okay. Share premium 10,000 was already acquired of the subsidiary at the date of acquisition. There has been no changes. So we will also write down the share premium of the parent company only. Retained earnings, we already figured it out in working number 5, which was around 74,000. So we have to bring that figure into a consolidated balance sheet, right? But before we end up the equity, we have to work out for the NCI. This part doesn't belongs to us, so we need to show it separately. And this value will be from the working number 4, which is 13,500, right? So here, liabilities, you can simply add them up, okay, which is 135 and you get 47. So that's 182 over there for your current liabilities. Now we will just add them together, your liabilities and equity, and see if our balance sheet is tied. So in that case, it will be 65. Then you have your 35 of the premium, retain earnings at 74, NCI at 13,500, and your current liabilities at 182. So it's exactly 369,500, and your balance sheet is tied. Hope all of the workings are clear to you. If you have any questions, you can contact me. Thank you very much.